Welcome back. Well, Jindal Stainless reported a more or less inline set of numbers. In fact, from the lows of the day, the stock has recovered considerably. It's up close to around 7% from the lows of the day. To understand what's the way ahead, we're joined by Mr. Anurag Mantri, the Group CFO and Executive Director of the company. Hi, Mr. Mantri. Good morning. Always a pleasure to have you on the show. Let's get two big numbers out of the way. You started the year hoping for volume growth of around 20%, which was scaled down to around 10 to around 15% or thereabouts. Now you're in high single digits at around 8%. What do you end this year with in terms of volumes? And consolidated EBITDA, I see, is at around 20,000 rupees per ton. You hold on to this. Will it get better?
So, good morning, Nigel. So, like as you said, the volume guidance, what we are expecting this year to close at around close to 9%, which is around 2.35 around or 2.36 sort of million ton number. This is primarily because of, and this is still almost a 95% achievement, what we said earlier, despite our export market didn't pick up and there is a continuous dumping happening in the domestic market. On EBITDA guidance side, still we are holding to a consolidated EBITDA guidance of around 20,000 to end the year with, which include the JSL and JUSL combined EBITDA per ton. Which we were expecting to move towards 21,000, but still we'll be able to close the year with the 20,000 plus sort of the EBITDA per ton guidance. So we are more or less, despite the challenging market, on track in terms of balancing our volumes and EBITDA earnings.
So now you'll grow by 9% for this fiscal year, and your EBITDA per ton will be at around 20,000 rupees per ton. Are we getting that correct?
Yes.
And for the following year on this low base, FY26, will things improve? And also your export contribution, will it go up?
So, next year, at least volume side, we are hoping that we should be moved to again back to a double-digit territory. So, if you see last 2 years, if I take this year of 9%, but the previous year we delivered 23%. So, CAGR-wise, we are still delivering 16% growth in last 2 years. Next year, we are hoping to move to a double-digit sort of number next year from this base. Now, it's a bit early to give the exact guidance on the EBITDA and this because there are two factors to watch carefully. One is that what's happening in the US, which is our key export market, and we'll have to watch for how the US market evolving. We are so besides, I'm not keeping aside the tariff part, which we will come to know within few days. But otherwise, we expect with Trump coming, there should be a push on the infra and we should be getting a better traction in the market. We have already also what we as a US strategy, we started pushing the value added product in the US market. So we are already seeing a good traction on our US order book in last quarter. So last quarter 3, we saw a good traction as compared to the quarter 2, almost 1.5x of the increase in our US order book. And if the Trump pushes the infra development, I think that should give a good foray into this. Obviously, that the tariff have to be watched for, because if they put up a high tariff, though we still have a 25% tariff. So right now they have been saying only for Mexico and Canada. So we are hopeful that India should be insulated, but let's see, we'll have to watch that factor. And second is that on the domestic market, the continuous dumping in China. So our request, already there is a petition filed with DGTR for 25% safeguard duty, which we expect, we hope that the government should take cognizance of.
All right, we take that point. Hi, Mr. Mantri. Just a couple of questions from my end. I just wanted to know your outlook on debt from here on. Close to around 1684 crores is your net debt as of December. Where does this number go over the next couple of years? What's your cost of finance here? And club that with Capex as well. What's needed over the next couple of years?
So our Capex, currently running Capex, what we said is this year we said our Capex expend should be around 5,500 crore. There could be some spillover, but more or less because some of the Capex we may defer to next year. But more or less, most of the Capex almost were related to the acquisition of our NPI, our acquisition of Chromeni assets, which we acquired. Also the melt shop capacity, which we are putting up in Indonesia with joint venture. So those Capexes were committed Capex and those are already have been spent. So with this, what our guidance, if you recall, Mangalam, we said that this year we will be ending with around close to 5,500 crore of debt. Despite the lower number of the volume growth, we expect that we will still be in this range and maybe some better than this range. So we expect the debt to reduce from our previous guidance slightly better than the previous guidance. And the next year Capex, what we have planned right now, as per the planned Capex, is around 1800 crore, and plus any of the spillover Capex which goes from this year.
Okay, 1800 crore for next year, and for this year, I'd missed that number. What is the Capex?
This year, our guidance is right now 5,500 crore of the Capex spent. Mostly, I think we may be lower than this because we may get some of the Capex may get deferred to next year. But most of the Capex have been spent. So I think 90% Capex should be spent in this year itself.
Got it. All right. And your debt will peak out at 5,500 crores. Are we getting that correct?
5,500 crore. We will try to do better than that, I think. But the guidance for the year end is 5,500.
The big focus is going to be budget 2025. And Mr. Mantri, you briefly mentioned that imports also are worrying you in the export market as well. There's uncertainty. So what is your plea? I missed that number. What is the current duty in place? And where do you see that duty headed to?
So budget, our key request is that the basic custom duty on the non-FTA countries is currently 7.5%. So our recommendation is to increase to 15%. So at least level playing field is established for the domestic player from non-FTA countries specifically. This is beside separately the database safeguard duty which has been requested for 25%. Plus our second request is on the continuation of especially the moly and the graphite electrode to reduce the duty on that, because graphite electrodes are the key for the electric arc furnace based production. So our request is to government to reduce the duty on the graphite electrodes imports in the country.
For the year, you've given a 20,000 crore EBITDA target, which includes JUSL. Specifically for JUSL, what is EBITDA likely to be this year and next?
So JUSL typically runs in absolute EBITDA terms close to 700 plus to 750 crore sort of range. So we are expecting JUSL to continue delivering those numbers. Therefore, if you see on a consolidated basis, broadly, if in a per ton I convert it, it will always remain 3,000 ton plus 3,000 ton and the positive side of 3,000 ton per metric ton. That's why I'm saying so totally we should be able to still deliver 20,000 EBITDA per ton of the numbers for this year.
Got it. Appreciate you joining in, Mr. Mantri. Thanks a lot for joining in. As we said earlier, the stock has seen a good recovery, factoring in a better performance in FY26. We'll slip into a short break, come back, we'll be joined by a couple of managements. Don't go anywhere.